Good evening to all of you. Welcome you to today's webinar. So after a long time we are meeting again, mainly because of rains in Chennai. Today we are going to carry forward the discussion on Fibonacci ratio and applications. This we are going to give illustration on commodities. Last time, 2 weeks back, we had illustration on equities and equity indices. So today we are going to discuss that concept and show its applications in some commodities, particularly international commodities like gold, crude, and also we can also look at the MCX contracts for gold and crude. Okay. So now we will look forward towards first a brief discussion on the Fibonacci ratio, and then we will straight away go to the charts and show its applications. Okay. So now we know about the Fibonacci ratios. We have already discussed before that ratios are important. Like most important ratios are the 0.386, 0.618. So these two ratios are important, but we will also consider depending on the rally or the fall, 0.235. Okay. Then of course 0.5 is not a Fibonacci, but 0.786. So these are important other important Fibonacci ratios. We have also illustrated that it can be used in any way. So you can also use numbers also, right? So what you can use is that numbers which are generally 1, then 3, 5, okay, 2, 3, 5, 8, 13, 21, 34, etc. And it goes on like this. So depending on which asset we are trading and what those prices, we have to choose a appropriate Fibonacci number. Now this can go on like this, and probably 144, 233, 377, like that it will go. Okay. So we can use these particular ratios or the numbers for trading the Fibonacci, or otherwise we can also use the percentage ratios. The percentage ratios in the sense that the first maybe 1.3%, 2.1%, then 3.4%, 5.56%, then 8.9%, then 14.5%. So all these things also can be used. All these things can also be used. And generally we have seen, another thing that we have seen is a trend factor. And the trend factor normally is that the asset markets, particularly the big asset markets, the indices or the gold and other things, normally there is some trend change if it falls below 5.5% or rallies above 5.5%. Then after that, normally we know you have this 5.56%. Then generally they use half of that, so it could be 8.4%. Then 1.0556 into 1.0556, which is around 11.2%. Then they use 14.4%. So like this, certain this one is applications. Trend factors are generally used, and this is called the Tom DeMark trend factors. Whatever said and done, I think markets being market, you should also it cannot be everything cannot be exactly taught or trained completely. So one has to train themselves by using a couple of indicators and couple of ways of trading. Okay, so you can also probably use, as we said, the trends like the pivot high, pivot low breakout. Or probably you can use the moving averages, you can use Fibonacci, you can use a combination of this. So whatever that is suitable to you, how you are trained to look at this market, okay, and how sophisticated you are and how much of risk management you are going to do, all those things will shape up the profits. Because when we use the Fibonacci or the moving average, when we say a particular number, let us say gold should be the important support should be something like 1780. If you say that, it can easily go to 1776. Okay, there can be a spike and there can be a close above 1780. So we need to be very careful. What we should do is that we should wait for one particular day's low to come above at that particular level. Then if it still starts cutting that particular thing, then we should look towards going on the short side. So immediately we should not rush. Let us say we say 1780 is the gold support level in the gold international price. It comes to 1776. So you should not say that no, I shorted below 1718, it has gone up. So 1718, you say that you should see how the commodity fares around that particular level. So there can be some spike down below that by $3-4 or so. So below that, if it starts the next day also going below that, then we should look towards going on the short side. So those things which we have to fine tune, which will show it right now. Another important thing that we discussed last time, the most important point is that suppose if the let us say the market rallies from here to this place, okay. So let us say this is 10 rupees and this is say 20 rupees, okay, 10 then 20. So what is the difference? This is 10 rupees. So let us say on one particular point of time it comes down to 15. Then again for the trend to pick up, generally for the trend to pick up, what should happen, since this has come almost to 50% of this particular climb, 10 to 20 is a climb, and right now it has retraced to 15. So what should happen is, this 10, 20 is around 10 rupees, right? So difference is 10. Difference is 10. So first of all, it has to rally into 0.235. So it has to take off 2 rupees 35 paise above this level. So 15 plus 235 should be at least taken off before we can say that purely we are in again a bullish trend. So 10 to 20, it has come to 15. So there are many ways of trading this Fibonacci. There could be people saying that I have identified the trend, so it is not going to fall below 10. So immediately I will buy at 15 or slightly lower at 13.5 or so, depending on next Fibonacci level. That's one way of trading. There will be another set of traders who will be thinking that let things stabilize and let this trend start picking up. Let this trend start picking up again. So what is the pickup point? Okay, from the Fibonacci ratios, right? You can use normal Dow theory and all, but suppose from the Fibonacci point, if you want to use, it has to minimum cross this 10 to 20 climb, which is 10 rupees. 10 into 0.235 is 2 rupees 35 paise. So 15 plus 2 rupees 35 paise comes to 1735. So we can say that the trend has started to go up if there is at least a close which is above 1735 on any particular day, or if there is a spike high above 1735, it should again cross that particular thing of 1735 levels. So this is how normally you use it for trading this one. So let's look at this application. Straight away we will apply in international commodities. Then we will look at the Indian commodities also. Okay. So now let us look at the XAU USD, which is the gold chart. So this is the XAU USD, and we will go to the big chart first, monthly chart. Now in this monthly chart, if you look at this one, there has been a fall from this particular level to this level and other things. So let us look at whether it has come down below 23.5% of from which level. So let us say from this particular level, it looks as if it has retraced more than 23.5%, which will show in the Fibonacci right now. See, it has come down to 38.2, 1678. So it has come up to 1678. So when do we say again the trend is going to go up? Okay, so it has come down to 1678. Now it has started to stabilize around 1678. So when it started to stabilize at 1678, this is a monthly chart. So probably we can look towards going long above this particular month high, right? So this is the month high, which is 1760. And 1676, probably we can go on a daily thing. So I'm just illustrating on the monthly chart. So let's not get into the issue of whether we should be on board after such a long rally. Now, the point is that it has stabilized around 1678. So any breakout now from this particular level, which you can use to identify from a daily chart or so, you can be on the long side. Now, but to what extent it will go first, and then probably where will it get resisted? Now I told you that if it has already retraced more than 23.5% from this particular level, it has to cross this particular high to low into 0.235. This climb from this particular level, which is this is 1046 and this is 2073. So 2073 minus 1046 is approximately you get 235 points or so. Now, which you can see from this also. Okay, this is the 2073 and this is 23.86 is 1828. So approximately the same 250 points or so. So the rally has to take 250 points above the this one, that is from this particular level. Now this has come to 1675, right? So 1675 plus 250, it comes to 1925 or so. So we can say that probably in a monthly chart, in this particular move, gold has to cross above 1925 to say that the correction is over and now we are going to be in for a very big rally from there. So any cross above 1925 will signify that we are going to have a multi-year high again. Okay. Now till that time, the moment it goes closer to the 1925, 1930 levels, it will get resisted and will start coming down. So what you should do is that you should identify these two places. One is the 1675 which has not been cut. The other is the 1925 high. So whenever it starts going closer to the 1950, 1920, you should be prepared to make one exit. And whenever it starts coming closer to the 1675, 1680, you should be a buyer, keeping 1675 on a daily close below as a stop loss. So this is how you use the Fibonacci and then you do the trade on a big time frame. So that means this time also it went up to, now let's look at the daily chart and weekly chart. I will remove this. Now let's look at whether there was any 23.5% retracement from this level, which will be very dangerous. And let's look at the, because then any big rally will have its own problems then. So now it has come very closer to that, right? So I think probably we are now having something very close, 0.235. So this is 1725, 1730. There has been one monthly close which is below the 1735, 1707. So probably there is a chance that even if it goes up, we may have some resistance closer to the 2060, 2070 levels. So even if it goes above 1917, there could be some resistance closer to 2030, 2040 levels, and that also has to be cleared. Now this is coming very closer to below this particular level, which is from the 682 to this particular level, which is quite a dangerous scenario. 1682 to this particular level. I think if it starts falling further, then probably it will signify a very dangerous thing, which probably can signify even a further fall towards the 1534, 1535 levels. So right now we are now looking towards a 1950, 1920 and 1675 range, which we should use for trading. Now let's look at the weekly chart right now. Gold is a little choppy these days on daily chart or weekly chart, but if you look at from the pivot point area, so this is 1834, 1834 is an important resistance come support. So the moment it started to rally above that and fall below 1834, I think it signifies that this probably there is a top closer to 1877. So the moment it started to drop below 1834, it had a problem. So right now, it has to at least climb above the 1834 levels. So at least it has to climb above 1834 levels to look towards going back above 1877 and 1915. So you use the Fibonacci and you knew that probably there will be some resistance closer to the 1910, 1915. It went up to 1877. So you are looking for some short. So what is that particular short? Now the moment it started to go above 1877, if it starts to fall below 1834, then you should be in a position to go short in the market. Okay. So this is the observation type of trading. Now this is how, whether you want to feed it in the algo or how capable you are using it, I think that I leave it to you. Okay. So, but the point of understanding, from the point of understanding, it's clear that the gold is a tradable commodity right now between 1675 the lowest side and 1915 on the upside, and you should wait for some sort of a breakout or do something like that. So here, once it came to 1675, I told you it has met some important Fibonacci support levels. So if it started to climb above any weekly pivot, which is the 1755 in this case, then 1755 above that, it starts to go up. At least you know that it will go up to the next Fibonacci levels and all, 1825, 1830 on odd levels. So you could have been long above this particular level of 1755. above long of 1755. Now, if you want to go in the daily chart, the daily chart now at 1676, you see how many times it has come closer to that and started to rally. Now, see, this is 1676. This is meant as one important support level. So, what you can do is, you can even go long above this particular daily high, which is 1720. You don't need to wait for anything like that. So, above 1720 itself, because you know that it has stabilized. So, that particular bar which traded right up to this, okay, which is 1714, 1715 levels. So, you could have been long in gold even at 1715, if not at 1676. You could have been long in gold at around 1715 levels, okay, and you could have carried yourself to either the 1830, 1840, 1850 levels. So, you look at important Fibonacci support. The moment it starts to stabilize around the important Fibonacci support level, if just go long on that particular day's upside break, on that particular day's upside break. So, similarly, when it goes to an important resistance zone, then in that case, you go short below the low of that bar which touches that particular important Fibonacci resistance levels also. Okay. So, now this explains as far as the gold is concerned. So, we will look at the crude, but crude, let us look at the Brent crude now, XBR stroke USD. So, this is a Brent crude, and we will look at the monthly chart, and of course, the monthly chart has been is all not good because of this, but let us look at where this 23.5% retracement has come. Now, let us look at this particular monthly chart, which is 65 and 86, it is 21. 21 into 0.235 is approximately 4.5 or so. So, it has fallen below that 4.5, it is below 82 levels or so. Now, let us look at one other important pivot low in the monthly chart. This is 60. So, 60 and 86 is 26. So, 26 into 0.235, that is also 6.11, $6.01 or so. So, it has fallen below that $6.01, and this is 35, 86 is 52. So, 52 into 0.235 is $12, which is 74 and odd. So, probably let us look at that. It has not come down below that. So, now at least we don't need to worry about this particular pivot right now. So, there is an important support close to 74.50 levels in XBR. But here, if you look at it, 60.48 and 60.48 into this particular level, important thing, it is around 26. So, 26 into 0.235, told you, is around $6 or so. So, it has to rally from this particular low, which is this particular one. So, I think this $6 is 80.85. So, the moment it followed, see here, it fell by $6, right? So, $6 from this 80.85 is 86.85, 87. Okay. So, it is not broken. Now, the same $6 has to come from this particular low or the close, which is around, say, 78, 77 plus 6, around $83. So, it can probably look at, let's look at this particular XBR crude, it is 82, 86. So, it has come very closer to that. It has come very closer to that. And probably we are a little bit worried that if it starts crossing about 83, again it can establish an uptrend. So, we have to watch very carefully on what crude is going to do. Again, whether it is going to start its rally mode, and we are seeing some sort of spike now coming this particular week close, and this is going up. So, we need to be quite careful about it and know whether this is an important low or so, for which we can also use our MACD. So, we are now trying to look at different combinations. We are only looking at the Fibonacci. We have got some information now that it has to stop its rally around this particular level. So, let us look at the MACD chart, or both on daily chart and weekly chart. So, on the weekly chart, the MACD has crossed below the red line, trigger line, and then a pivot has been formed. So, now this position as to hold. The 77.47 as to hold. 77.47 as to hold. If the important trend is, if the trend is to maintain on the upside, okay, so 77.45-47 as to hold. So what should happen is, now it is now coming closer to this weekly previous week top, which is 82.87. So a further break of 82.87. Okay, we talked about $6 is 77.50 plus 6, 83.50 or so. So we need to look at 82.86. So 83 is very closer to that. So we need to see a clear break about 83 beans. Then this will become a very important bottom. This will become a very important bottom. Now let's look at the daily chart from this point. Now the daily chart is, the MACD is still is almost closer to the, it's coming a little closer to the trigger line. So we need a clear crossover above that before we look at to go on the long side. So we need to wait for some pivot formation to take place after the MACD crosses the trigger line, so that we can go long. So at this point of time, the crude is under observation. It can shift itself on the downside, or it can shift itself to the upside. So this particular low is going to become a very important low. That is the 74 mark which we got right now. So 77.45. So the 77.45 is going to be a very important mark. Now let's look at from the Fibonacci side for the ratios from this particular low to high. See here, the Fibonacci on a this is 78.40, so on a close basis, so we got something like 77.84. So there was one spike which is below this. So that means there is some support that has emerged at this particular level. This is some support which has come, but that particular day's high is a very high, big bar. It is 81.53. So unfortunately, this time the bar has been so high that this particular trade, if you go long, carries a big risk of $4 in crude. So I think the trade has to be avoided from that perspective, that the stop loss is quite wide. So that is another way of risk management, because you cannot enter trades where probably the stop loss is very far off. So that one particular point also we should note. So you should always wait for a stop loss to come to a very comfortable level. Okay. So the crude is taking some support which is closer to the 77.80 to 78. Then probably the next important level, which is the 75.80 to 75 levels. So at this point of time, we need to look at this penetration of something like 82.85 or 83.50 on the upside for us to confirm that probably we are on the upside. So this is as far as the crude is concerned. Okay. Now we will look at the we will look at the Indian MCX gold. So MCX mini futures, we'll look at it. So first, for the Fibonacci angle, we should look at the bigger picture right now. Okay. So the bigger picture is very clear that this. So this is the bar, which is this is 43,620 on a monthly chart. I think this is this place is very important. This place is very important. This low is a very important low. Now we look at from the weekly point of view. So from the weekly point of view, this particular because here it went up. If you look at it, okay, now. Okay, so this is an important low. Okay, because this is the one low which is important below the trigger. So this is a very important low, not this, not this. This is an important low. So it should not come below this 45,485. If it starts coming, then it will look as if it is only a correction. Okay, so we look at the daily chart. So daily chart definitely is still on the upside. So we need to wait for some more levels before we can look towards a confirmed short position as far as gold is concerned. But nevertheless, from the Fibonacci side, if you look at the overall Fibonacci ratios, the same thing which is applied as far as the XAE gold, you look at the whether this price has crossed above this 20. So those who are looking for investment should look like this. In gold, a lot of people will be interested, right? So in investment also in their household. So let's look at this particular level. So it came down to this particular level. That is 38.2% retracement. So 38.2% retracement gave some important support. So probably you could have said that you can go long here or you can go long there and then again go for a long. Okay. Now suppose if they say that from above what price then we should literally grab the gold. We should say 48,771 and this is 56. So approximately an 8,000 or 7,500 levels. So there can be a rally from the 7,500 levels, which is around the 50,000 mark. So right now it is still short of that. So another some more rally is possible before it cools off. So we still need a lot of waiting game as far as gold is concerned to confirm that it is going to establish itself on the upside, which should come only above the 50,000 or 50,100. So right now we can say the same thing like XAE gold. This particular low is a very important low, which is the same 38.2% retracement, which is 43,620. So you can tell them that any dip from 47,500, another 5%, if it brings down by to 45,000, 44,000, 45,000 in gold is a buy because this seems to be holding. This is a very important low. This seems to be holding. So then after that there will be a bigger crash. Then in that case we need to wait and then look towards some accumulation at some important low levels. Okay. So this is as far as gold is concerned, and we will look at the copper in India, copper futures. Copper futures, we look at COMEX, then we look at the Indian copper futures. So this is let's look at the daily chart. Copper and all on a daily chart will never look like a proper trending thing. It's a very disgusting commodity as far as trading is concerned, because it will be a lot of choppiness as far as copper is concerned. So right now we can only think that we can say is this seems to be an important low, which is the $3.99 or $4 is a very important low. And we can also say that this particular thing which has come, which is the 4.19. So I think the first thing that we can talk about is 4.20 as an important low, and then below that is going to be around 4. So right now at this point of time, I think we should be looking more towards the long side, keeping this particular low as an important low, which is the $4 or so is a very important thing. And now it has become around 4.19 or so. So it is on the long side, as long as this 4.19 is not cut. So that's coming from the MACD important resistance support levels. And right now, if we look at the this one, that is see here it was 4.88. Now 4.88, this fall is 3.96, so around 92 cents. So 92 into 0.235. So anything which is above, which comes around say 0.21, I think 21 cents. So any fall which is more than 21 cents from its peak. Now, for example, it went up to this level, right? So 4.62. So if it starts coming below 4.4, see here it started to come below 4.4. So the moment it starts to come below 4.4, then we can say that again this uptrend probably from this place, this uptrend which went there probably is in a little bit shaky for a little more downward move. So you can say that below 4.40. Now here it went up to 21 cents from this particular level. If you see, it is 4.82. So 4.60. So you see, this particular day it took support at 4.59. Right. So the moment it started to go below 4.59, we can say that it is on the downside. It is on the downside. So right now, since the move is in the 4.45 levels or 4.46 levels, minus 21 is 4.24 or so. Okay. So this 4.19 can hold. This 4.19 is supposed to hold. Right. So any dip now, if it is going to be below 4.23, 4.24, could prove to be a little bit dangerous. So any movement upside, what we are doing is that we are keeping this particular one from here to this in that whatever 0.235 from that particular, from the peak until such time it is crossed, we keep that as a place where from where the trend change can happen. So just look at any from any pivot low to pivot high. If a 23.5% retracement is done, then in that case the same 23.5% of that has to be taken from an important low before the trend starts, and it is vice versa. Okay. So this is as far as the international copper is concerned. We will look at the Indian copper, MCX copper futures. So MCX copper, I think the look wise everything is very similar to our international copper. So we have a very strong support here. So this is a very important support. Now this is proving to be an important support, right? So from whatever this happens from this level, which has happened 812 to 673. So 812 minus 670, it is 139 points. So this should 139 points into 0.235. So we should have at least 32 rupees cut from the top before we look towards on the shorter side from any rally. So here it went up to this which is 811. So 811 minus 32. It should fall below 779 before we could go for a short. So here it's the 776.50. So from the moment it started to come below this, we should go for a short. We should go for a short. So similarly, 31, 32 points here, approx 781, 755, 27 points. So that's how you should look towards trading. Smaller, that is smaller range. That is, if you don't, in the case of gold, in international gold, we showed something like 250 points. But the 250 points is for, because you know that from the bottom to the top, it has cut a particular 23.5% Fibonacci. That means any rally will have an obstruction at the higher level of 250 points. Similarly, from any particular higher level, since the top to bottom correction has been 400 points, so any rally, if it takes place, from there if it draws down by 88 to 90 points from the top, then in that case it will again start falling down. That's what we showed. 1880 minus 90 becomes approximately 1790 or 1780 levels. Now that is where it is trading. So if it starts cutting below that, then probably we will have much greater fall. So this is how normally you use all these things for trading. That is what we showed as far as the indices are concerned, and as far as Nifty and Bank Nifty and all also is concerned. Now, having shown that in commodity, just because we are now dealing with the indices because of the fall and other things that has taken place, so we will for a few minutes we will also look at the Nifty and Bank Nifty, whether it has crossed 23 point, whether it has fallen below 23.5% of any big rise which has taken place. Okay, so that will give an indication that any rally where probably it could meet its resistance. So we will now move to the Nifty, having explained it in commodities. We will just look at the Nifty. So Nifty, we will look at the weekly chart. So which are the one which has gone below 23.5%? We will look at that. So let's look at this from this place, whether it has crossed 23.5%. Yes. So this is that 23.5% retracement from this particular move, right? Because this is on the weekly chart. If you look at it, there is an important fall also which has taken place. So I think this move has taken below this 23.5% from this particular move. Okay. So let's look at which are the other areas from where it has fallen, so that we'll know that whenever it goes up, where will it meet resistance. Now probably this area we'll look at it. Maybe even that has been. This is also a weekly chart. Almost same. Okay, so it will not make much of a difference. Okay, so we'll look from this particular one. So it does not come below that. Okay, it does not come below that. So at least to some extent there is some support which could come probably towards the 16,800, 820 level. So that does not it does not touch below that. So right now this particular area of rise and fall, which is 18,600 to 17,000, 1,000 points. So if at all, whenever Nifty rallies, it will have a 1,000-point resistance from any bottom. So since it has come to 17,200, any rally right now will have a resistance closer to the 18,200 mark. Will have a resistance closer to the 18,200 mark. And if you see, this is rally of 18,207, correct? So it has to, this is 1,000 points. So 18,205, 207 at this point of time has to be cleared before we look towards the long. But there are, of course, from the Dow point of theory, that if it moves above 17,600, it can move to 18,200. So if you want to play that 600 points rally and all, you can do that. You can do that because there is a chance that it can go up to 18,200. Okay, any particular rally. So any cutting above the 17,600, 17,650 can take it right up to 18,200, where you need to be a little bit careful. So this is as far as Bank Nifty analysis from the point of view of the Fibonacci. Now we are in a weekly chart, right? So now let us say this particular week, see there has been a fall, and there is another this fall MACD is below, and this fall also MACD is below trigger line. Now if this high is going to be crossed, this is 17,785 or so, then the 17,218 can become a very important low. So probably the last important pivot low is 17,670. So instead of keeping 17,787, I would prefer 17,678. That is where we should be trained to look at the market slightly differently, because one particular indicator alone will not be sufficient to tell us everything. So above 17,670 could probably confirm that we are in for some bottom at 17,200, 210, 220. And the move can take place closer to 18,200, and you need to be careful about at 18,200. Then you need again a rally above 18,200 to go on the long side. So what we should do right now, you should be looking towards on if you're a trend based person, then in that case you should wait for a cut above 17,670 on a close basis, buy. Then in that case look towards exiting closer to 18,200. Okay, so that is from the trend point of view. Now let's look at the, we can also look at the Bank Nifty. Now Bank Nifty, of course, it has cut this 23.5%. So let's look at whether it has also cut this particular place, which could be a little troublesome then. So it has come very closer to that place, so it is standing there, very important. So let's look at whether we are going to get any daily basis about this particular thing. So yes, so now this has come. Now how do you trade using this Fibonacci? Let us say this particular day is a very important low, because from the Fibonacci point of view, it has come to 36,655, which we have highlighted in one of the webinars 2-3 weeks back. Now this 36,655 is going to be a very important from the Fibonacci, because one important support has come of 23.5% retracement from some important low. So that means we need to be now look towards buying, keeping this particular low as a stop loss. So tomorrow if it starts going above this day's high, then we will have a bottom here. We will have a bottom here. Higher bottoms keep coming, because of which itself we can go for a long. So if it is going to be above 37,505, okay, then we should be a buyer as far as Bank Nifty is concerned. Above this Bank Nifty is concerned. Now, to what extent it will go? First of all, we look at whether this has penetrated 23.5 retracement of this particular move has been taken off, right? So let's look at that. So this is 41,890 to 39,119. So 41,890 minus 39,120 we keep. So 2,770 points. So 2,770 points rally from this place itself is possible, which is plus 36,658. So 39,425, 39,430 is possible. So another 2,000 points is a possible, or 1,700 points is possible. So about 37,505, just look towards the buy which can even take you right up to 39,000 plus, where you need to be careful and see whether you should make an exit closer to that place, and if it still starts going above that, then we should be looking towards the buy again. Okay, so this we have placed it purely from the Fibonacci thing, because this particular move, this is this 23.5, this is at 23.5% from this particular low. From this particular low, this is 23.5%, and from this particular place, it should have been a 50% mark, should have come to 36,100 or so. 36,658 is there, and 36,100 is there. So I told you that before starting this also, we can't expect certain things. From one level, there could be one Fibonacci. From another level, it could be. So there will always be multiple clustered Fibonacci levels that will come. So one which is very closer to that, we need to identify and go for this. So since it looks to have stopped at this Fibonacci ratios of 23.5% retracement from that level, we should honor that. We should honor that and not wait for 36,100 immediately. We should go along about 30,505 itself and look towards the 39,200. So that is how you normally look towards trading this. So we will look at, on a daily chart. So this is a weekly chart. So this is a weekly chart, and we have seen this particular week, if it is taken off about 38,186, it has a good chance of going up. So look at the daily chart. The daily chart is still on the deeply on the downside, so it may take some time, and probably it may go up, and then we may have to go for a short at some stages there. Right now, we look towards honoring from the point of view of the bar chart, and at 37,505 will now look towards me on the long side. That we can get it from the hourly chart. See, the hourly chart, if you see, we are now on the that is this one, that is the a pivot above this particular level has been traded in this. Okay, so now we are looking towards this particular level. See, this as a important place. Now this particular level is an important low. That is 37,126 according to us is an important low. So if it starts cutting even this particular high, which is 37,472 or 37,505, we can be long, keeping this particular low as a stop loss. Keeping this particular low as a stop loss, right? So and it has already come down very significantly down, very highly profitable zone to look towards going on the long side. So suggestion is do not miss this particular trade of going above 37. If there is a loss, what can we do? As a trader, we need to look towards doing trades. Profit and loss will come. So we are looking at the most important probable profitable combination to go long, and this is an important place where Bank Nifty can rise by 1,700, 1,800 points. Okay, so now it's 745, closer to 745. So any questions, please ask now. Thank you. So thanks for your participation today. As I told you, we can explain a lot of things. So we are trying to put together a lot of what our experience is. So we cannot completely impart everything, but at the same time, we can train your mind to think on certain lines, and so that you can become a successful trader. Okay. So thanks for your participation. Stay safe. Good night.